Okay, we're up and live. Let's take a look at today. Pretty simple, straightforward day. We have had not a ton of events. So if you remember yesterday, the bulls, I think, really established the bullish trend, the overall bullish trend. And so it was done. So we're not going to look at yesterday so much today, just today. The first thing that happens, we get a gap up. And there's always this moment during a gap up is, will there be a gap fill or will it gap and go? And that's a difficult question to answer. I'm not going to go into all the things that you might consider for that. What I do is look at the context. There was a bullish trend established yesterday really clearly. And the first thing that happens is the bears, you see that, the bulls get sampled right here. See this? It goes negative right there. Trapped orders right here. Tension takes a moment while that happens, and then it moves up. Sample, impact, bulls, check. And then bulls get sampled right here. Tension, rising, bulls, check. That's it. That's all that's happened today in terms of events. So we don't have a lot of events that have gone on today. There's not a whole lot to look into. The bulls established the trend into yesterday's close. The bears are not here. That can create problems for the bulls because, as you know, how do you pump tension? You take out the counterparty, and we don't have any counterparty today. There aren't any. Now, you could possibly look at the open. You see how we had negative velocity here, and then it was positive. You could look at that. You could, and you could say that right here. Now, and I say this all the time, samples off the open, I'm always I take those with a grain of salt. So you could look at that, and you might say, well, what was the motivation of these people right here? Remember, today's conditions where you need to see the bulls come in and fail. They need to step out of the way, and then the bears could take this down. There were no bulls, so this group here, at best, was eager. So what would they be looking at? Well, obviously the gap close. And that's just conditionally not a great reason to just jump into the market in front of a freight train. That's what you're doing. You're jumping in front of people who have just established control, wiped out your party over and over. And you try to get in for a gap closure. So that's what, if anything, that would be why they're there. And you could say, oh, we had negative yesterday, positive today. I don't think there was a ton of great precedents. This one was different. We were looking for that sample all day. We were looking. That was something we were actively looking for, and then it happened at the open. I wasn't looking for this into the close. It wasn't something I was actively doing. There wasn't a huge precedence to see that happen. So if you're looking at that, that's something to consider. Was there some precedent for that to happen? Was that something we were trying to do? No, I wasn't. Okay, so that's where that's at. We had maybe some bears here, if anything, and there's a good chance that they've been liquidated, and if they haven't, that thank you. We have bulls here, bulls here. Now, let's take a look at the mechanism they're using to drive this up. And it's pretty clear. This is just beautiful to me. It's just beautiful. You could see that we popped up and we did clear out yesterday's high right there, but it's a new day and the conditions, I think, justify it. We got above it and we are inverted, and it is just inverted. The tick is staying down, not pushing too high. The prices are moving up. That means there's money coming in, and it's the sellers who are bringing that money in. That's the way I'm looking at it. So the sellers are inverted. Every time the sellers see a sell signal, they hop in and get destroyed. That's how I'm looking at that. That's the mechanism they're using. How is this going to top off? What kind of things are we going to see? Well, we'll see the tick. We'll see the tick clear out. So you see a new tick high somewhere along the way. That'll be something to watch. The next thing to pay attention to with momentum is going to be this. We're at negative 60%. Negative 70% is very high. that's really high. So we're going to get to a point, whether you like it or not, where the bulls are going to have to deal with this high level of tension. It's getting hot. And that means that at some point we'll see a skid back down that'll release some of the tension, cool things off, and then we can get back to business as usual. That's the next event that you're going to need to be paying attention to in your mind, because that's coming up. It's like, this is not going to, we're not going to see this get up to 90%. That's not going to happen. No. We'll get up to 65, 70, maybe higher if we can get something dramatic to happen. And the market's going to need to deal with that as it comes at us. So going into the close today, now that we can see there's just bulls here, there are not any bears. We had a little bit off the open, and I say a little bit because it was right off the open, and I always take those with a little bit of extra. Okay. You could see that this is a serious grind, and that, see how tension was just like moving. I mean, this is just moving. Tension's not moving. It's not like super aggressive tension. So this is definitely grinding. You can tell it's rising. It was after, so it's a gap and go. How are we going to keep this moving? Can we keep this going for the next day? Can we do this into tomorrow? Yeah, of course. Why not? This is how markets work. You tell people things are high. They use things like standard deviations to say this is high. And that's okay. It does work. But in a trending situation, anyone using any format for deviating prices, meaning prices have tended to be here, now they're here. You're using a deviation. Your brain is going, oh, okay. If you're using those models in trends, they're going to hurt you, because during a trending market, deviations don't work, period. Because the market is shifting. The middle of whatever range we've been in has changed, and we're doing discovery to find that new middle. So deviations will betray you all the way. So I think that's where we're at here. And the people who are essentially paying for this move are the people who said, oh, well, the range is like here, and this is way out of the range, so it's going to definitely mean revert. And that mentality is not a terrible mentality in the right context. In this context, the bulls have completely dominated over and over. So if you're saying it's going to mean revert and we're going to get the bears get their money back, okay, maybe it does. But at this point, that's not something you should be looking at. What you should be looking at is, how are the bulls going to continue this up? How do we get this to continue to do this? And there's two things that you got to do. The first is you need to convince more bears to come in. So we need some bears to show up, sell in, and then liquidate them higher, which you'll see if tension moves further. The second thing is to continue an inversion. Inversions can happen for days. It's just that getting an inversion in place typically also needs some trend establishment. So we've been observing inversions and trying to pick them out and see them as a model of how the market's moving. And today, it's just straight up inverted off the open. And because of the trend condition, because we've seen the bulls just totally win, this is just inverted. It's just pulling people in. So what's likely next? Well, the next thing coming up here, right here, you could see the velocity is quite close. I mean, look at that. And so you see this skid down. It's like, what was that skid down? Well, it was obviously people trying to jump in early on this, because they're anxious. They're eager. They're sitting here going, it's deviated. Let's mean revert. And so as soon as they see a signal start to come up, they go, just jump in there. I want to be first. And oh, look at that. Look at, so you see that? Right back up. So who did that? It's pretty simple in my opinion. It was these people. It was the bears, the people trying to shadow the bears. And they were trying to get in early, so they wanted to front run a legitimate liquidity for bears. And they got in early. They didn't get in front of a sample. What they did was got in too soon. It had an impact. You see it moved it away. So consider what this means in your head right here. If you get into a position because you think in the next few minutes the bears will get in, you get in and suddenly the bears, the distance it's going to take now to get the bears in is further. That's what happened. The bears were almost in. They did something. Now it's got to come back up, and it extended the time. You see that? So whoever that was that tried to jump in before bears extended the distance. And essentially, they were not in front of bears. They thought they were, or they hoped they were. You jump in, you hit that, it didn't work. So you can see this has been going on. These participants are hoping. Now, what would happen, let's just hypothetically, what would happen if bears were going to consume liquidity? Then you could get in and they would still get liquidity. You would be in front of them. But when you get in front of what is hopefully a bears, and then that thing you're looking at gets further away, do you see what I'm saying? They weren't there. You're chasing a ghost. You're chasing an idea that's not backed by an institution at this point. So the next event to watch for is going to be this. Come up, give us a sample, and then we get to take a look at what happens. What do the bulls want? The bulls want some bears. They want that. They want bears to pick up liquidity, to do their best, give them a fair chance, and see them fail. That is the story of the markets. I want to see the counterparty try their best when it's not going to work. I don't want to see them try their best when it's going to work. I want to see you try the best after it's pretty clear you're in boiling water. And then your failure can help my cause. So the bears want to see a sample here. They'd love to see a sample here. They'd love to see a little bit of move down, and it might cause some trouble. And that's what happens. And then turn them over and run up tension higher. Okay, so we need to talk about one structural problem that is coming up, and tension's getting high. So if you trap in some people, let's say we get some in and they come in and it goes like this. Let's say this is what happens. It starts to get to a point where you're like, this never gonna happen. Just forget about that. To get things up to negative 80%, do you know what it took to get us past 90%? It took the entire world, the whole world feeling a pandemic and falling apart to see 90%. I have never seen that before. It was completely overblown. But we're not going to talk about that. What was important is that the whole world had to fall apart for tension to get to 90. The whole world. So let me ask you, is the whole world coming together? No. So, I haven't seen or heard things that make me think like we discovered a new element that's going to change the economy or something. I don't see that. So going up to 90% in my head does not make sense. It just doesn't work out. You need a reason to get up to those levels. 70% is okay. You can turn people's pockets out and get 70%. So we could get up to 70. And I'd say that's about here, near future. We did something like that. Get up to negative 70. Sure. So at this point, the best case scenario for the bulls is that bears participate, they do their best, and fail. They just can't make it happen. They can't get it to work again. And then we move on. Now, it's important that you recognize that we're moving into a part of the trend where the things are getting a little bit different. And what's important to remember about this is that the blood, sweat, and tears phase is over. Okay, the bulls got in a long time ago when they saw the bears cheat. If you remember that, if you were around, you might remember. The bulls saw the bears cheat and they said, hey, this is short term. It's not happening. And I was here. We walked over it. You can go watch that video. Anyway, so after that, then they added. The bears tried. Then they tried to cheat. Then they tried. And every attempt failed. That was the blood, sweat, and tears. We're not in that phase anymore. What we're in is it's over. So I think what's happening is bears aren't looking at this anymore. I mean legitimate bears, not people who think markets are going to go down. Those are different. Bears are looking at this saying, okay, we're not looking at a pullback scenario. Like we're not trying to, okay, so they're not looking at the market crashed and it's pulling back. That's not the attitude. The attitude that we're going to see here is this market is doing this, and the bears are saying we're looking at initiating a new high, which is different than a pullback. Okay, so a pullback, you can add to a position, you can do different things, you have a different mentality, they're cheating. In a new high scenario, your back, when you start, is against the wall. You don't start in a position and then get pushed against the wall like in a pullback. You start against the wall because as soon as you fill, think about this. If you buy here with a position, let's say 100 contracts, and it moves up and you have a $10,000 position profits, and these are totally unrealistic numbers. Like, anyway, so let's just say the winner has 10,000 extra dollars to use any way they want to advance the market. And institutions are much bigger than that. So when you jump in, you have, let's say, a 100 contract position here, and you have $0. They have more money than you, sort of, in the sense that they have money in the market holding things up because it's real actual money, not margin saturated positions. And they have the profits made by that money to continue to push. So what's going to happen is that if you try to push against them, you can't liquidate them very easily because their positions are too wide. And you would have to exert a ton of force to get them, the controlling party, to a position where that they would actually be forced out. You'd have to reverse the whole trend. And that is so much work. And your back is against the wall because all they have to do is push you upside down and you liquidate. So you can't push them out, they can push you out. That's what gives them control. So at this point, these players are not looking at this as a pullback. They're looking at it as a complete new initiation project. And that is different. It's going to be hard. There's going to be failure. It's going to be painful. And since bears are the worst, it's going to take way longer than you want, pay out way faster. So I'm not looking for that yet. What we're looking for is we're still focused on what can the bulls do to continue this going. I'm bringing in what the bears are thinking because we need to know what they want to betray them. You can't betray somebody you don't understand. So we need to say, what do you guys want? Maybe we can work together. And the bears are going to say, well, we got to initiate a new position. And the bulls are like, okay. Maybe we could make that happen. And then screw over your position. Sure. And if you're not thinking like that, well, you're too nice of a person. You need to toughen up a little bit. This is a competitive sport. It is not a financial investment risk world of magic. It is a competitive sport between people who have money and people who also have money, and they are not fighting people who don't have money. If your account doesn't have 7 or 8, 9 zeros in it, you don't matter. You're like a flea on the floor in the middle of a coliseum that's playing this massively aggressive sport, and you think, I mean, you do matter in that you are having an impact because, they like you to participate. It really helps create liquidity. But in terms of like, it was my fault the market went up or down. No, not really. Not anything longer than a day. Maybe intraday, maybe. If you are trading in 100 lots, and on a very, very, very slow day, maybe 5 lots. But you're contributing to a narrative that's going on way above your head and way outside of your control. And your job is to understand that narrative. And I think right here, these guys are saying, okay, let's work together. And I whether you want to call it collusion or not, it doesn't matter. I don't need to speak to the bears to collude with them. They are the other team. I know what they're doing. We don't need to talk. We don't need to send messages. I don't need to make phone calls. I know what you're doing. I know what you want. I know how you work. So in that regard, it's implied collusion, is that we're going, okay, we'll give the bears a little bit. Are they going to take it? Of course they are, because they know we're going to give them a little bit. And then they're going to take it, do their best, and we're going to fold it over. And that's how things work. It's not surprise. It's not shock. It's not that those things don't happen. That's what you propagate down to the people at the bottom who need that to be true. Otherwise, they'll feel quite betrayed. They need to know this market is random. They need to know that the overall trends are something of a mystery to all participants. They need to know that. You need to know that because you're too uninformed to know it. And you won't keep participating if you think that the trend was known. I wouldn't. I would quit. I would quit. If I felt like I was playing a game that was not fair, I'd quit. So do not tell people that this is a fair game for people who are super rich and connected. Do not tell them that. Anyway, enough venting and conspiracy talk, the fun stuff, right? So what's next? We need to get a sample. I'm trying to pump this up so you can see the important. We need the bears to be wrong. So what we need is to have this. I would love to see us scoot up, get a sample, see some impact from the bears so that they can say, we're here, and they inject that capital into the market, because that's the only way we're really going to get any strong advances off of this. Okay, that's for the upside. We're in the same condition we were in yesterday into the close. Trend is established. Your team, the Bears, have totally lost. The Bulls have totally dominated, and what we need is to see the Bears participate. And it very well could be that if you look at this here, that this sample was just that. You know, a big gap makes thirsty traders. It's just what it does. They look at it and they, I'd love to see that. And then they do things. So overnight tonight, could we see a gap up? Yeah. Do I suggest or think that you should buy? No. And I didn't think you should buy yesterday in the close. I thought you should hold into the close. If you had a long yesterday into the close, holding was a good strategy. A new position was not, because the gap up was not required. It was not a necessity. No, but in terms of trend, if you had a position, don't cover it. And I think the same thing today. If you're holding along, covering right here is, we haven't seen bears get any footing in this market at all. Covering that, getting into a new position could be dangerous, because if you're getting in now, you'll be viewed as the market as an uninformed chaser, and you might be a part of a group. And that group could be used to create liquidity and offer an opportunity for the bears to participate so we can burn off this tension. And you're going, wait, but I'm bullish. If we're going to burn off, you're not really, because you're not actually, you're not playing with the bulls. You're chasing, and you don't have the funds to be a real bull. So you'll be treated as liquidity, especially in this. So you have to be careful about that. Your job was to figure that out this morning, or at least this afternoon. I think it was well established here. I think this was a good bet. I would say this was the best trade. This was the second best trade, and this was just no-go. I never would have shorted that. So this was likely the best trade. We had established the inversion. We had bullish success already. We got that thing going, and it just took some time, and now we're seeing it. It worked out fine. So we need to see that. I'm trying to push. We need some bears. You can't just have bulls come in, and that at some point the money runs out. Socialism breaks and everything falls apart and it folds over on you. You need a counterparty who has funds to take. Did I just say that? Socialism? Probably shouldn't say that. Or shouldn't I? So we're playing with bears' money. We're saying, oh, this is ours. Let's tell you what to do with it. Well, when it runs out, that means that the bulls need to take their own money and use that to continue to work this up. And nobody wants to do that. People want the market to do the work. So bring in the bears. I'm hitting this point over and over and over. I'm just trying to stress to you. We need some bears to come in and be wrong. So I'm not really looking for a bullish sample at this point. I don't know that I would take it with, it would be bullish sample, sure, but that's not the thing I'm looking for. I'm looking for the bears. The bears need to come in and burn this off. Like, we need some of this. The bulls want a major trend that just, you got to have some burn-offs. And the most likely way for that to start is going to be the tick blowing off, getting a new tick high. I don't know, anything. We just need some bears, something for the bears. It's going to be a decay retest, liquidity, a blow off from the tick. That's about it. Those are the three things that I'm anticipating coming up. And again, look at that. Popped up, got close, skid down right here. We keep seeing this. And I think we're just going to keep seeing this activity. It's eager bears trying to jump in front of legitimate liquidity consuming large portfolios that are on the bearish side. And it's not really working for them. And if it does, that's too bad, because they're going to learn a bad lesson, that you should emotionally jump in before that are patient. And if they make money from that, it's even worse because point of evidence to justify bad decisions, and that will hurt them in the future. You should not profit from bad decision making. You should actively seek to not do that. It will hurt you more than you realize. So that's what these people are doing. If you're wondering, why is this doing this? It's enthusiasm from the wrong team. We've continued to find people to literally pay for this whole rise that are non-institutional. It is just, or you could think of this, you could think we just have sellers going into here and they're all upside down. You could think of it that way too, sure. So that's where this is at. Into tomorrow, the big events are going to be, can we turn those bulls, the bears upside down? The other thing is the same as we had yesterday, which is elasticity, which would mean that this could move up, right? Come down, sample the bulls do nothing, and then we sample the bears, and then the bears run elasticity. We need bullish failure first. Then, and only then, would you say bears make sense. And then that could be the elastic market that brings this down. That's where we're at. That's the only thing. I'm not looking for anything else, just that. We would need to see bullish failure first. Then bears could come in, and this is a approved move down is what that would be. And the objective is to get tension down lower so that you can drive it back up. And that way you'd get prices to come down, get better things, and you could push into leg. So that is it. So if you're sitting here thinking, oh, I'm going to get into a great short, I'm going to short this, you're wrong. You're completely on the wrong side of the market. You're out of tune with the narrative that's going on. If you can find those data points that show you that the things you're wanting are happening, you could potentially make money on the downside. But to get to a bearish market, there are at least 2 days ahead of us. Best case scenario. If you're jumping in now, you're wrong. Even if you made money tomorrow, because making money tomorrow doesn't suggest the bears have gained control. It suggests the market is allowing the bears to blow off some steam so this can run higher. And until I see data points that say the other way, you're being contrarian. You're saying, I see things before I saw them, which is, you have that backwards. You're supposed to see things and then you saw them. And you're saying, I see that the bulls are going to fail before you see bulls failing, is a really bad strategy. These are not high prices to sell. This is a trending market. They're different. Okay? They're different. And until you see bulls fail, don't see them fail. Stop sitting there saying, I see bulls are going to... Okay, so that's where we're at. Tomorrow, if you just want to be bearish, you're just a big fan of the sell button, okay. Wait for bulls to fail first, then look for liquidity by the bears, and your scope is tension as close to zero as the bears can get it. That's your soonest opportunity for any rational trader to participate. There are no institutional traders selling yet. If there are, be careful. Propaganda, because I'm pretty sure they're not. I see them buying all over the place. And we've been seeing that for days, not just today, days. So I know I'm getting a little more like emotionally juiced in my words where I'm using more drama than usual. But I just want to make that clear, okay? Trying to make this clear. Your next opportunity if you're going to sell. Otherwise, bulls, what you need to do is hold until you see that happen. Or until you see some other, maybe you reached a target. Maybe you reach some, make the money. Don't hold too long. If you are reaching where you think you should be reaching, take the money. Your job is not to sit here and think that all the money is to be made by the bulls. Your job is to say, what do I want? What do I want? What do you want out of this? What is it that you... Because if you don't have a goal, and I don't mean price-wise, you don't have an objective, like who are you unwinding? How's this look? Then you're giving into the idea of unlimited profit target, which is a really far, far, far profit target. And it's not that that can't happen. It's that that's a bad philosophy that will significantly damage your trading. Your goal is to sit here and say, what do I want out of the market? What are you after? And if we got those things, then take the money once it reaches whatever that you thought Don't go further. And if it continues, you sit back and observe the narrative and say, I see what's going on, until you see more opportunities, which is typically complex conflict. So I would, there's not much to be done here. Trends are hard because at any point they can convert into the bears coming in to blow off some steam. So you have to keep that in mind. And if, maybe you have tools that are great for trends. And if you do, use those tools. If you don't, just sit back, because deviation tools are not the way to go right now. So tomorrow, keep your eye on the bullish sample, the bearish sample, see what we can get set up. If the bears come in and buy up liquidity, if the bears come in and consume liquidity and bring things down tomorrow morning, and the bulls did not fail, look for a V. Look for that enthusiasm to turn into getting liquidated. And unless there's like some event that can fold over this entire move up, the bulls are not going to let go of their position at the behest of the bears sweeping the market 10 points on a, I don't know, couple 100-point trade. It's not enough. So keep that in mind. Things can get aggressive for the bears. I want to make this clear. Bears are violent people. They like sharp, quick bars, and they can hurt. So tomorrow, the market could see very aggressive bars. That's totally possible. Bears do that. And there's a good reason for it mechanically. But the point is, just remember that things can become violent. Violence is not a data point of success. It is not an indication that your side is winning. The fact that you can successfully, violently move prices does not mean you're winning. It doesn't. And in most cases, a violent move is an indication of failure. It means you suck. You can't handle the system. You can't handle it. You're too blinded to see the right side. Usually violence for the bears is a bad thing for the bears. Even during the big fat move down from the pandemic, a lot of the moves were not violent. They just did this thing. The system, the machine was... So big fat move, violent moves do not indicate success. I can't stress that enough, because we get a lot of that in bullish trends where the bears come in and say, now, and they think that punching the market is successful, and then boom, they get hooked and they're out. It happens all the time. So keep your eye on that. Be aware. The trend is established. We had our inversion. We're moving into victory lap zone, and this can be tough trading, because there's so much freedom for the bulls to take heat. They don't have to dump their position. Why? A move down to today's lows wouldn't stress out the bulls. You could close the gap today. Wouldn't stress out the bulls. They have a lot of freedom and a lot of sharp teeth. Be careful about that. Make sure that if you're going to try and get into the bullish side, you look for this best possible scenario. Everything's perfect, and then buy in on its failure, because they have sharp teeth and they're going to use them and they hurt. So watch out for the teeth. So that's mostly where we're at today. Not a lot of events. There really wasn't much going on today. It was just an inversion that scooted up, and the bears have shown that they're pretty enthusiastic about trying to hop in early, which is just good for the bulls. And we're getting to the point where things are hot. So that means tension's up near 60 or 70, and the bulls are going to need to start considering approving a bearish move, because they're the controlling party. So approving a counterparty move to cool things off, and set up a bunch of opportunity and conflict for another leg. So just be aware, this is where we're at. It can get tough. And I think that a burn off could be great tomorrow. I think another day of this slow grind up in tension, 2 days, okay, we need some elasticity here. We need this to come down, cool it off, and then bring things back up later. Just make sure you make some money. If you're bullish and you're holding, just make sure you make some money, because Elasticity is the way that bears get their foot in the door. That's if it wasn't, it wouldn't be a stress test. It wouldn't stress out the market and provide any opportunity for growth. That's the moment when the bears get to say, hey, they're letting us in, and they get to make some money, they get good positions. And if the bulls don't show up to defend that tension getting to zero, right? It says, if the bulls don't show up here, so the bulls say, okay, and they bring it down, and it gets here, and there's no bulls, then the bears are going for the throat. They're going to try and get daily tension down under zero the next day. They're going to be looking at, like, they'll get excited about it, and you'll see a lot of injection of capital, because that's the time when the bears have the best chance. So you have to keep that in mind. That's why I say we're getting to the point where this has got hot. We got a lot of things going on. Remember, an elastic market tomorrow is where the bears will get their chance, but it doesn't mean they have control. This is a tough spot. Bringing this up because I think it's important to keep in mind. So you're going to want to watch for that elasticity establishing. Bulls get sampled, which we haven't seen bullish failure today. The bulls are not failing. The bears are not succeeding today at all in any, nope. I know markets move down, scary, but we haven't seen failure by the bulls. Stop looking at the bears. Once we see the failure by the bulls, then we need to see if the bears are actually interested, because if the bulls fail and then the bears fail, the bulls are going to liquidate those bears. And no matter what was going on in real time, it was a trap. So it would be sort of a complicated trap. But the point is that you have to see it first, especially with this stuff going on. Okay, so that's where we're at. I don't think it's a good spot to be initiating new longs. I think the best spot to initiate longs would be after you see a great bullish trade, buy in on the teeth. And the teeth are the part where you have a lot of, like, the sample, everything's perfect, and then it just runs through where you would have had your stop. Look for that to get in. That's what I mean by teeth. That's what you're going to want to be looking for. Okay, so outside of that, bulls have established their control in the market, and until the bears can see a little crack in that armor and then hop into some genuine liquidity and start pumping things down, the bears are not the team to be playing with. So that's what we're doing right now. I hope this was useful. I'll take a look at your guys' comments. I'll come back. I think that tomorrow morning is going to be the most interesting spot of tomorrow. If we get elasticity come in the first hour or so, it's going to define the entire day. So I'll be here early morning. I'll do a little live stream through the first hour or something. Trying to make 6.5 hour streams of the entire market. I don't think that as many people will watch when that happens. So I'll try and do a short one in the morning because we'll have some events, and then a little later in the day. So expect that tomorrow. All right. See you guys later.